Thank you, Mr. Secretary. Great to have you back to the committee. Appreciate all of your leadership, and I just was so interested in listening today. The thanks for the regulators that we talked to yesterday for their swift implementation of S2155 on regulatory reform. We appreciate Treasury's leadership on that, your work on strict sanctions around the world on Venezuela, North Korea, Iran, Russia. You've demonstrated a lot of leadership there. And of course, tax reform that's been talked about extensively. So we're grateful for your leadership as our Treasury Secretary. I want to turn and mention a couple of things that we've talked about today. On the repo market that Mr. Perlmutter talked about and the ranking member, I think the concern is that the New York Fed's not supporting the repo market. They are the repo market. I think that's the challenge. And we don't see the bank reserves that are more than adequate, billions more than needed. On JP Morgan, for example, $120 billion in daily cash held at the Fed on a $60 billion cash requirement, and yet they're not entering that repo market. So I'm pleased that yesterday at the FSOC meeting you talked about this, because I do think supervision is an issue here, and the stigma attached with something that was a regular part of our business lives, which is running a daily, intraday daylight overdraft at the Fed. On mortgage servicing, I appreciated your comment there. Again, that business shifted out of the bank sector to the non-bank sector because of Dodd-Frank. And for 5 years that I've served in Congress, I've tried to get the Obama administration and the now Trump administration to support the idea that mortgage servicing rights are not a derivative that should be treated in that manner. It's a natural, as you know from your long career in mortgage finance, a natural companion to the origination of residential mortgages. So I hope FSOC will lend its weight that allow mortgage servicing to not have the capital penalty that they have in Dodd-Frank. And with Mr. Foster, he and I've had a lot of conversations about digital currencies. Jay Powell just answered our letter on the idea of a digital token. And I think the concept's a little misunderstood. If we want a digital future in finance and we want to protect the preeminence of the American dollar as a reserve currency, this idea of a digital token is an important concept. And it's not anything except allowing our government to facilitate a blockchain transaction process legally in the future. We have Visa debit, we have MasterCard, we have SWIFT, FedWire, the ACH system, all true, all have private sector participation in them and government participation. But this idea that there's a new rail created that's a blockchain rail that both bank and non-banks can participate in to settle transactions through a token, it's coming our way faster than we like, perhaps faster than the 5-year time frame you outlined. So I do think it's an important issue for the FSOC to continue to consider, and also to have Treasury's view on, independent of what your agent over at the Federal Reserve thinks as you implement Article 1's power on currency. Let me turn and ask you a question about World Bank issues that we had a hearing a few weeks ago at the subcommittee on that topic, multilateral development institutions. There was no Treasury representative. We had an illness that day. And one thing I talked about in the hearing is the legislative mandates that are put on our managing director and our governor to direct votes at the Fed. So my question to you, Mr. Secretary, are you concerned that that kind of governance to support or oppose a financing project ties the hands of the United States in leading at the bank due to being forced to abstain on voting?
I am.
And does Treasury have an amount, a record of those abstentions and that long binder, I understand, of rules that our governor has to follow? And is that something you could share with the committee and help educate the committee?
We can come back to you on that. It's a huge bureaucracy running all these tests, and we keep the data so we can get back to you.
What I hear both from your former colleague, Mr. Malpass, and others is that it just reduces America's effectiveness to lead the bank. So I think we'd be very interested in working with Treasury on a way to reduce those mandates, fine-tune the mandates, remove ones that are redundant, and have your leadership on that. Is that something you'd be interested in helping us on?
We look forward to working with you.
Good. I thank you, and I yield back.
Gentleman from Arkansas yields back, and before I recognize the gentlelady from Ohio, I think we all want to wish the gentleman from Arkansas a happy 29th birthday.
This is how I wanted to celebrate it.